Let's have a look at working 3 for Ryan Limited for the manufacturing account for 2016. So it says provide for depreciation and plant and machinery at a rate of 10% of cost from the date of purchase to the date of sale. So remember, we sold machinery up here for 18,000. So now we need to find out what is the new value of our plant and machinery. So 4 steps to this. Number 1, you're going to calculate the value of the plant and machinery. So you're going to take the 18,000 away from our opening balance. We're going to calculate the depreciation figure for the manufacturing account. That's this year's figure. And then we're going to calculate the accumulated depreciation for the balance sheet. And then we're going to find out where the matter of profit or loss on the sale of the machinery. Remember, we received 3,600 for the sale of an old machinery. So let's have a look at the balance for our plant and machinery. So if you look at our trial balance, plant and machinery costs 320,000. So that's going to be our opening balance. So remember the steps, we use this for question 1 for depreciation. Your cumulative depreciation then is going to be the difference between the 320,000 and the 245,000. So remember, your cumulative depreciation is a credit balance. So 320,000 minus 245,000. So we've got an opening accumulated depreciation balance of 75,000. Now we can start filling in these tables. We need to reduce our plant and machinery by 18,000 because we've sold in the previous adjustment. This machinery cost 18,000, so we're going to credit our plant and machinery by 18,000 to reduce it, and then we're going to put it into the disposal account on the debit side to find out if we've made a profit or loss. Next thing we need to do, then we can balance these off because we don't have any more information to go in there. So we're going to find the balance, so it'll be 320,000 on each side. So the difference between the 320,000 and the 18,000, that's going to be 302. So 302 is a figure then that goes into our balance sheet for our cost for plant and machinery. Then your cumulative depreciation, so we need to calculate. So it says in the question that from the date of purchase to the date of sale. So we purchased this machine that we sold on the 1st of the 4th, 2010. So we need to find out how many months we had it for. So the 1st of the 4th, 2010 up until the end of that year, that's 9 months. Then we have it for a full year in 2011, full year for 2012, full year for 2013, and a full year for 2014. So that's 12 months for each one of those years. And then we sold it then on the 31st of the 6th, 2015. So we had it for 6 months then for this period. So we have it for 63 months. So the value of the vehicle that we sold is 18,000. The rate of depreciation is 10%, which is taken from this adjustment. And then we had it for 63 months. So you're going to multiply 63 divided by 12 to see what is the depreciation on the vehicle or the machinery we just sold. So if you take 18,000, we multiply that by 10%, then we multiply by 63 months and we divide it by 12. So that's going to give us 9,445. So we need to reduce our accumulated depreciation account by 9,445 because that 75,000 includes that figure. And then we're going to put that into our disposal account. So we're going to debit our accumulated depreciation account, and then we're going to credit our disposal account of 9,445. Now we need to calculate what is the figure that goes into our profit and loss. Okay, or for this case, it will be going into our manufacturing account. So we're going to take the depreciation for our total, which is 302,000. So we're going to take 302,000, multiply that by 10%. That's going to give you the depreciation on all the vehicles that we have, or all the plant and machinery we have in our company. And then remember that we had this machinery of 18,000 for 6 months. So we need to find out what is the depreciation on that for 6 months. So it's 900. So this year's depreciation then is going to be the 30,200 plus the 900. So that's going to go into your manufacturing account. And then we need to find out what is the depreciation then, the accumulated depreciation to go into our balance sheet. So that's the difference between the two. So the 106,100 minus the 9,450. That's the balance that goes into your balance sheet for accumulated depreciation. So your balance then brought forward then is going to be that 96,600. We'll tie that up now in a second. And then we need to find out in our disposal, do we make a profit or loss? So in our previous adjustment, we would have put the scrap of 3,600. We would have debited the scrap materials account to reduce it, and then the corresponding credit then goes into the disposal account here for 3,600. So the value 18,000. What we got back is 13,005. So we made a loss. And we made a loss then of 4,950. So at the start of this, we said we needed 3 figures to calculate as part of this adjustment. So our first figure was to calculate what is the value of our plant and machinery after the item we sold. So that's going to be 302,000. That goes into your balance sheet as a fixed asset. So that's in your balance sheet as a fixed asset. Then we have to calculate what is the accumulated depreciation to go into your balance sheet then in your accumulated depreciation section of the tangible fixed assets, and then you need to calculate what is the total depreciation for this year to go into your manufacturing account. So we calculate our accumulated depreciation of 96,650. That'll go into your balance sheet, and then is 31,100. That then goes into your manufacturing account. And then we made a loss then of 4,950, and that figure then will go into your manufacturing account. So 4 figures, adjustment 3, just like you would have done in the previous adjustments for your company account and your sole trader. Same process of doing it, fill in your balances, then from the trial balance, calculate what is your accumulated depreciation, and then fill in the figures you have from the question itself to identify your plant machinery figure, to identify your depreciation for this year, to identify your accumulated depreciation, and then to identify whether you made a profit or loss. And that's working 3 for Ryan Limited manufacturing accounts.